explain some of the things in our double entry principle as we started yesterday. But today I want to insist about the account, the T accounts in each and every element of financial accounting or element of financial statements that you will be that will be tested with in your assignment number 1. All right. All right. Now, a debit and a credit in relation to assets, owner's equity, and also liabilities. As we all know that it says that the concept of debit and also a credit refers to a specific of a T account. The debit side is the left-hand side of the T account, and also the credit side is the right-hand side of your T account. And then now this is an example, a simple example that I've made for you about a bank account. Bank account, you can see now on your left-hand side is a debit side, and then on the right-hand side is a credit side. This thing is called what? A T accounts. Therefore, all transactions that that you may face with, you need to open accounts of each and every transaction. All right, let's move on because we are rushing to do our corrections. Now, we've got something that is very, very true, that is very, very important for us to know. The way in which transactions are affecting the elements of financial accounting equation can be summarized as follows. We have owner's equity, assets, and also liabilities. Remember, our accounting equation is the mathematical equation whereby we see assets equals to owner's equity plus liabilities. But in this case, I want to show you on which side the owner's equity increase and then as well as on which side they decrease. Also, assets and liabilities. Now, about owner's equities, guys, owner's equities are increasing on a credit side, I will send this note to you guys so that you will have these notes and then you practice on your own at home or everywhere you stay, right? Here it's telling us that our owner's equity, they have a possibility to increase on credit side, but decrease on a debit side, as I've indicated with an addition sign, and also the decreasing side is all about what? A minusing sign. All right, as well as assets are increasing on a debit side, but decreasing on a credit side. Liabilities are increasing on a credit side. Liabilities are increasing on a credit side, but decreasing on a debit side. I think everything is clear about the increasing and also the decreasing. Once you master these guys, because everything about financial accounting or everything about accounting equation, you need to know how they increase, how they decrease. All right. And then accounting equation is showing us or is educating us about a double entry principle whereby we see one transaction affecting two types of accounts from the different elements of accounting. It can be as the same as well as it can be what? A different. Okay, right now I want to introduce you with something. We have something, we have the information that every transaction that you may face with, each transaction must have its own account. And then before you can record your transactions in any T account of it, you need to consider about 4 types of questions. Therefore, in each and every transaction, you must ask yourself 4 questions. All right. First question says that what 2 accounts are we dealing with? Secondly, what types of accounts are they? Thirdly, how does this transaction affect? Right. It affects accounting equation. Yes, I'm very sorry about that one. All right. The last one, it says Are we going to debit or credit the accounts? These 4 questions we need to ask ourselves before we can do the thing of recording of those particular what transactions. All right, once again, let's just welcome everyone who just joined us now. I think we are all guys displayed on the screen. Please let's mute our mic so that others may not get disturbed. Thank you so much. All right, let's just do our activity of yesterday. I've gave you something to do at home. Let's just do it so that we can get more information. But before you can do it, you must remember that every transaction must have its own account. And also you need to identify 2 types of accounts. Now you know how many types of assets, liabilities, and also owner's equity. All right. The first transaction was saying, I think you still have something. First transaction was saying the owner of the business deposited. Okay, the owner deposit how much money? Right, let me just write it. Deposit 50,000. Right, in the current account. Okay, this is a first transaction that we need to analyze. The owner of the business deposited how much money? 50,000 in the current account. The current account belongs to the business. It's for the business, remember. All right. And then now there is a price or there is cash that the owner have been deposited to our bank account. Therefore, there is an inflow of money. I've told you that when the owner of the business deposited something in the account of the business, therefore, we have a possibility of our owner's equity to increase. Our owner's equity will increase because the owner is depositing something. But when the owner is withdrawing particular capital from the business, and then we can have a possibility that our owner's equity will decrease. Or if is there any drawings that have been happened, or if is there any expenses that have been paid, and then our owner's equity will decrease. Now, we ask ourselves a first question. First question says that what types or what 2 accounts are we dealing with in this transaction? The first transaction says the owner deposited how much money? 50,000 in the current account. Then now let's just analyze or identify 2 types of accounts that must be affected in this transaction. What are they? Right, we know where we have cash here. There is cash, right? There is cash, right? Yes, correctly. Someone is already answered. All right, here is a bank and also a capital. Bank and a capital. Yes, it will be a bank and also a capital. Right. A second question, what types accounts are they? Types accounts are they? We need to name according to what elements of financial accounting. We know we have what owner's equity, assets, and also liabilities. What about a bank? A bank belongs to what? To which element of accounting? It must be. Yes. Therefore, we are dealing with assets. Bank is asset, and owner's equity is, capital is owner's equity. Thank you so much. Right. Thirdly question, it says that how does this transaction affect accounting equation? Are they increasing or are they decreasing the accounting equation according to the elements of financial accounting? What about assets? whenever a business is coming and is inflow of money inside of the business, the cash, and then our asset will increase. Yes, will increase on which side? On debit side. There is an increase on a debit side. Good. Also here will be an increase now on a credit side. Yeah. All right. Thank you so much. Then now you can open T accounts of these. Yes, you can open T accounts. I can see there is someone who rose a hand. Okay, let me give you a platform. I think it's Jude. Jude, you can take a platform. I can see your hand is out.
Hi, just a quick question. I just want to confirm if maybe the marker will put it wrong or right. If maybe I write it like.
All right.
Someone is calling me. Sorry about that. Okay, then under asset, I can just say bank positive 50,000, and then under owner's equity, capital positive 50,000. Will that be correct?
Yes. That is correct.
Okay.
Yeah, correct. Because you are indicating as an increase. Right.
Okay.
Yeah,
Thank you.
Thank you. And then you know how to draw a T account now. You must draw. Let me only draw one of it, and then this is your T account. You can draw it so that you will so that you will record everything that you have selected. Yeah, this is your T account. Firstly, I've got a bank account. You know, on your left-hand side, a debit side name, on your right-hand side, a credit side. Yeah. Judy, you can lower your hand now. But if you still have any question, you can impose. All right. Thank you so much. This is a T account, guys, because this thing of increasing and also a decreasing, it is give us information that we need to see whether a bank is increasing on debit side or on credit side. As we indicated here, bank, because it is an asset, it will have an increase on a debit side. Therefore, we must record on a debit side. This money is for a capital. Then how much is money? It's 50,000. Yes, 50,000 as a capital. So there is an increase on a debit side for a bank. Now, because our double entry principle, it says that in our first account, if we recorded something on a debit side, we need to balance it by recording something on a credit side to our second account, which is a capital. We have done with our first. Now let's consider about our second. Therefore, now let's just draw what a T form or a T account of a capital now. Draw a T account for a capital. Right. This is a T account of a capital, guys. Now, don't worry, we still have more time to master these, guys. Still have more time because assignments will start be opening next month. Okay, now we have a capital. Obviously, on our right-hand side, we've got a credit side, as well as on our left-hand side, we have a debit side. Therefore, now we want to see the thing of a balance, a double entry principle. If you have entered something on your debit side from the first account, you need also to enter something on your credit side from what a second account. Now, yes, it is true that capital as an owner's equity, it will increase on a credit side. Therefore, the money, it will be cash.
No.
Right. I'm trying to write here. Okay. The indicate is a bank. How much money is 50,000? Right. Can you see now? We have done now. Can you see the double entry principle have been applied? Yeah, it have been applied direct from the bank on a debit side to the credit side of what? Of a capital account. Now we have done with this transaction. Okay. Anyone who still have a question about this, guys? If you have any question, if you have any question, then you can ask, and then we can continue after that one. But if you have no question just now, we can continue with other things. Okay, but the things we need to master this like this, nothing less. Right. Thank you so much. I think more from you guys, we understand this thing of double entry principle, and also we also understand how to record these transactions in different accounts. Yeah. Right. Maybe let's just take a last transaction. I can see now our time is running fast. All right. Let's just take a last transaction. Okay, here is a transaction. Let me take this transaction deliberately. Okay, buy stationery from C and A. How much is amount of money? Is 120, maybe 120. Right, is 120 amount of money. Therefore, I've told you that stationery, the books, pen, pencil, all material for school learners, exercise books, and all those stuffs. Then we need to buy them. Therefore, there is an outflow of money. And then in this case, we need to consider about our first question. We identify first accounts, and then we name them according to the elements of financial accounting, financial statements. And also we must see whether they increase or decrease. And then the last one is all about whether we're going to debit or credit those accounts. Now let's just start with our first question. What types of, or what are the two accounts must be revealed or must be identified from here? Firstly, we have 120 of which is cash. Therefore, bank must be affected. Bank must be affected, as well as stationery. It is a type of expense. Stationery, it is a type of expense, remember. Yeah. So these two accounts must be affected. And then bank is from asset. Therefore, asset will decrease. They will decrease, because the money is going out from the business. Okay, there is a decrease. On which side? On a credit side. Then in our last account, which is a stationery, there is an increase in our expense. Yeah, is an expense from the owner's equity, remember. All right, it will increase. On which side? On a debit side. On the debit side, right? Now we can draw our T form or our T account quickly. Okay, now we have our T account, right? This is our T account. This is our T account, right? Right, we've got a bank, that is our first account. On your left-hand side, credit side. I mean, on your right and also on your left-hand side, got what? A debit side. A bank, we know that a bank must be decreased. Stationery will decrease our bank. Ne? How much is 120? Yeah, it's 120. Then we also have a stationery. We open the account as well. Account for a stationery. Account for a stationery. Here is right. Remember, we are applying double entry principle. Therefore, we've got a bank here. How much is money? It's 120,000. 120. I mean, not 120,000, but 120 rand. Yeah. Then we are done. This is for a stationer. Right. All right. Our time is over, guys, for this first 30 minutes. But tomorrow, I like us to actually, I have more questions like that are like your from previous assignments, from 2020 till now. So I want us to do those questions because I can see now we have an understanding about how can we record our transactions. Ne? So I need you tomorrow to join.